What's going on, everybody? Welcome back to Prop Firm Match, your trusted resource for all things prop firms related. Today, we have another special interview for you. We're joined by Marcus, who is one of the founders of the Blueberry funded prop firm and also the general manager. So, Marcus, thank you so much for joining us today.
Thanks, Emmanuel. It's a pleasure to be here.
By the way, we're doing another giveaway, so make sure you stay tuned to the very end to hear the instructions on what you've got to do to enter this giveaway. Before we get into all the juicy questions we want to ask you, you want to just give us a little bit of an introduction about yourself for those who are seeing or hearing you for the first time?
So I'm Marcus Featherston. I'm the general manager, one of the founders of Blueberry Funded. I've been in the CFD space for about 9 years now and specializing in prop firms for around the last 3. Blueberry Funded, we've been live for about 3 months now, which has been my main focus as of recently. And yeah, sort of manage the day-to-day at the business and everything along those lines.
That's amazing. And so what led, I'm sure you've had a lot of experience in different areas, but what led to the founding of Blueberry Funding?
It's a bit of a long story, to be honest, Emmanuel. I mean, so I've been, as I said, I've been in the CFD space for a while. I guess I sort of got thrown into the prop side of it a few years ago. A broker I was working at started doing platform services and infrastructure for prop firms. We took a bit of a risk, a bit of a gamble on. It's a very new emerging industry. I think there were a lot of doubts about it in the CFD brokerage space. Not a lot of people understood it. And we went with it. We started onboarding a few firms and that really skyrocketed from there. And I think sort of where the industry was going, I think when you work on sort of a technology basis, you're always looking at a quantity. You want to get more prop firms, find more clients and build it up that way. But I guess I had a bit of a change of heart when I was looking at how the industry was growing, a lot of risks that were being taken by prop firms, a lot of firms shutting down and sort of a bit of chaos in the industry. And I sort of realized that I think the best vehicle to take this industry into the long term is a brokerage. I mean, essentially brokers have experience with regulation, compliance, technology, like a much deeper skill set than what was going on in the prop space. So I sort of changed mindset from being in the consulting tech mode of find as many prop firms to work with as possible to the we really need more prop firms of substance, more quality in this space. And sort of the idea of a broker-backed prop firm was something I became very passionate about.
It really does sound like quite a journey. I've been listening to everything you were saying. So one of the things that I'm thinking about now is coming from a brokerage background. What inspired you to start this broker-backed prop firm? And also, what were the goals that you were, setting out to achieve? Like, what is it that you wanted to do with this new wave of prop firm, if you will?
So coming from the brokerage side, I think having a different understanding of liquidity, risk management, and the financial side of the business, I think we really wanted to come in and build this firm with sustainability in mind. And it's a bit pretentious, but we really wanted to reshape the narrative that's really dominating the prop firm space. I mean, a lot of prop firms, it's been a crazy few years and it's become a bit of a race to the bottom. And I think that whilst a lot of prop firm owners are really good at a lot of things, good at managing communities, good at marketing and things like that. And I always say this to people, that one of the best things about the prop space is it's a very e-commerce user experience. And that's really user-friendly. I mean, everyone knows how to go on a checkout, put in card details, and buy something. The worst thing about the prop space is that a lot of owners of prop firms treat these businesses purely as an e-commerce business and they forget about all the other parts of it. And essentially that's led to a very large race to the bottom. And also too, I think what's been very prolific in the prop space is, there's always this saying of, built by traders for traders. And I love that sort of a lot of prop firm owners have been able to be the voice of the trading community. But the problem with that is sometimes you have to put your business hat on and, step away from the client side, because I mean, in theory, you could build a product that's amazing for traders, give as much leverage as possible, as much drawdown as possible, make it easy to pass. That's not hard to do. I mean, what trader wouldn't want that? But from the business side, that's not sustainable. We've seen the space really sort of devolve into that over the last few years. And what we want to do is reshape the narrative. Look, I think we come in with sustainability first in our mindset and in our vision. And look, sometimes that's a bitter pill to swallow for traders. When you're looking out there, you're seeing huge leverage. You're seeing sort of this fantasy sports casino model being run by a lot of prop firms out there. You look at our conditions and you look at us and you say, oh, like, that's not as competitive or that doesn't work for me as well. And I get it. You're a trader, you want the best product that you can get. The problem with a lot of those other firms is, they might be the best product that you can buy off the shelf, but they're not the best product for you long term because, your capital or your simulated capital isn't really safe with them over 6, 12 plus months if they're not running a sustainable business. So for us, we approached it with sustainability first. I think a lot of prop firm owners come into the space thinking it's easy money and they chase the easy money. And, anyone can just make some easy conditions, buy one, get one free, 50% off. We sort of approach it from a different way. Like we actually chase the hard money in the space, if that makes sense. We want to build a very sustainable firm. We don't make it easy for traders. I'm very honest about that. We have quite strict conditions because ultimately trading is hard. It's not easy. And the rewards are hard because of that. And I think the conditions should really reflect that. And what's really interesting is it kind of has actually worked for sustainability, not just for us as a firm, but actually for the traders. I think something I'm always proud to tell people is, we're not just putting all these rules and conditions in there so people don't pass. It's kind of the opposite, really. What we see in
Yeah.
our funded stage is a very high funded trader profitability rate. A lot of sort of surveys done by industry publications show that rates on average between 25 and 40%. Ours is 60 to 65%. So are our rules stricter? Yes, it's in the name of sustainability, but we truly believe, and the data shows, it actually makes people better traders, which is better for us in the long term, and it's better for the traders in the long term. So that's sort of our real goal with this firm is
Yeah.
sustainability. And I think it's something traders really need at this point in the industry.
I love it. I think the pursuit of sustainability is a beautiful aspiration. And it made me kind of think about, I guess, the right time to ask you outside of, I guess, sustainability. The prop firm space is incredibly competitive right now. What would you say separates Blueberry Funded from other prop firms in the space right now?
The number one thing is being broker backed. But broker backs can come in different shapes and flavors and everything like that. Blueberry Funded, backed by Blueberry Markets, been in the industry for 8 years, services over 50,000 traders globally, tier one licensing. So it's backed by a very established entity, which is good for sustainability and to know that your simulated capital comes with a large degree of safety and that more safety and guaranteed payouts over the long term as well. So that's number one. But I know that can come off as qualitative. In terms of quantitative, the benefits, look, we do have some very affordable challenges, across the board in different segments of our offering. Usually our accounts are around the 5, 10, 25K, quite a lot lower than industry average prices. And we also offer our rapid challenge for a lower cost, fast track pathway for traders to get access to simulated capital. In that sense, I think we come in at a very good price competitive point. But the main benefit, which links back to being broker backed, is the trading conditions. So I believe PropTalk Match actually were the ones who did a good analysis of sort of all the listed firms. I think it was a month or two ago. And look, I think the fact that we're backed by a broker, we have access to that infrastructure, access to tier one liquidity providers, whole team of people at Blueberry Markets that can not just pass on one price feed like a lot of out of the box prop firms out there do, but sort of aggregate and manage a range of different liquidity providers. I would say the best conditions you can get on a lot of assets in the space. So that's one that comes back to benefit traders directly in their trading as part of being broker backed.
Nice. I was going to ask you, are there any unique innovations or qualities that are found with broker backed prop firms versus other ones? But you kind of like touched on that and answered that. So I want to now kind of ask you, how do you support traders from all sorts of levels, right? Because sometimes you have brand new beginners and you have people who are in the game for a long time. How does Blueberry Funded focus on supporting traders at all levels?
There's sort of a few parts to this. So obviously for beginners, we do offer some much lower cost challenges for people to come in and give it a try. We also host monthly contests as well. So if people want to come in free, they're at no cost and just try out the conditions, try out the platform, they can do that as well. And this is something that really appeals to me about prop firms as well, is they are gamified to an extent. And I think a lot of people look at gamification as a dirty word, but I actually like it in the educational sense because look, coming from the broker side, like I've analyzed tens, probably hundreds of thousands of trading accounts over the last 9 years. And the amount of times you see people come in, maybe they're a bit cashed up, like 10, 20 grand in a broker account, they just blow it because they don't know what they're doing. And they would benefit a lot from a program which they put less money down on. And it's teaching you stay within this drawdown, hit this profit target, a range of other things. Don't gamble, don't over leverage. So again, I think because our challenges come from a very sustainable risk adjusted place, they also sort of would educate, in my opinion, or set some general parameters for beginner traders to adhere to advance their skills. So that's what I think we offer to beginner traders. In terms of more experienced prop traders, I mean, obviously we have up to 400K in allocated simulated capital and a scaling plan that can allow them to go up to 2 million in simulated capital over a period of time of continued success. Look, we're still early as a firm. We're only a few months in, but we have started to see those people come in and start to hit the early requirements for that program. So that's something that can allow people to scale alongside in their journey with us. We'd rather people scale with us rather than have capital at a range of different firms, risk one of those firms not being the best and, going down or something like that. In terms of professional, really experienced traders, this is something we do quite bespoke, but, having access to sort of a range of liquidity providers and sort of upstream infrastructure. So we do sort of bespoke arrangements for some traders. If they're quite rare, people are going to come in with a very solid track record or something like that and come to us. We can put together almost like a bespoke scaling plan for those people. That's something that we were looking to do down the track, but I think we've had such a good public response that, we've had people come in and inquire and, it's a tough process to go through. to get access to that. But we can be quite flexible for people. And that's really the benefit I think we get of having this infrastructure and all of these hands behind us.
You said you're early. Obviously, you guys have a lot of aspirations and things that you want to do. But even then, you still have a lot of different ways that you can approach and meet every trader at whatever level that they're at. In your experience, yeah, I heard you mention that you've analyzed like hundreds of thousands of traders' accounts. What's one of the number one mistakes or things that you see traders doing often that usually ruin or prevent them from being successful? And what can they do to refine their approach to become a better, more consistent, successful trader?
Yeah, the thing I'd preface this with is that there's no one mistake or method of success. Like, there's no silver bullet. I mean, obviously, every influencer out there says always do this or never do this. The problem with that mindset is like, there's no silver bullet. And if there is one, it doesn't last forever. Like, markets are dynamic and strategies and things like that are dynamic as well. And you always have to change it up. I think the one mistake people make is thinking that there is one path to success, or there is only, there is this list of mistakes that you should never do and you'll automatically be successful. That's something I'd preface all of this with, but I would say there are some sort of general rules that I'd apply to this sort of mistakes to avoid. And really, the simple one I've always seen is just overcommitting or just overtrading. I've talked about this for ages. Like I said, there's no one method of success. There's broad pathways and a lot of different things that work and don't work in tandem with each other. But yeah, I would say overtrading is the number one thing I've seen really kill success. Because look, ultimately, it's kind of interesting trading when you look at it. People always say the stat that gets thrown around, 97% or 99, 95% of traders fail in the long term. That is correct. But the interesting thing I've always seen in the data across, small, large brokerages is that on any given day, most traders are actually profitable. It's kind of interesting. When you do the deep data analysis, you're like, oh, on average, not by a huge margin, but 52 to 56% of traders on a given day are actually profitable. And that's really interesting because you're like, well, how could everyone be profitable on a day, but over the long term, everyone loses? And it comes down to, it shows the power of psychology or ongoing success at the end of the day. And the issue of overtrading, I would say that, and look, this is taking a real partial data set, but if I also think of the top 100 people that I've probably seen over the last 9 years that made a lot of money and then lost all of it, it was overtrading. It was the idea of either false confidence or greed or things like that. And so I always say, like, the most successful trading strategy to analyze, or it's the best trades that you make are the ones that you don't make at the end of the day. It's all about the trades that you don't actually place. Because, that's the thing, is that really trading, you could look at it as just a coin flip. A lot of the times the market going up or is it going down? And if you have a strategy that's going to identify that more than 50% of the time, you're in a good place. But it's the problem of overcommitting and overtrading or over leveraging as well. I would say that it's really sort of less is more when it comes to trading. There's a lot of behavioral finance and things that really back this up, of the cost of changing investments, the cost of changing asset classes, changing strategies, and sort of placing more trades just on average will erode so much of your profits over time. Like I said, there's a lot of answers to the question, but I would say that if I was to look at the biggest traders, sort of more people that were successful and then failed, which is sort of heartbreaking at times. Like, I've been looking at the trading account and there's someone up like hundreds of thousands, not in a prop firm, in a brokerage account. And you're like, just get out, take a breather. And they just keep going, rolling. They just essentially start rolling the dice, really. Because that's the thing, like false confidence, you're making a lot of money. It does go to your head. And that's the psychology aspect of it, is really mistaking your own success. And again, I think every good trader, even if they know what they're doing and have a great strategy, know that there is always an element of chance involved. And knowing when chance actually played a factor in your strategy or when it was actually just your strategy giving you that success. And knowing the difference between the two is a fine line, because, you get such a dopamine hit from winning that, you just want to go back in again, or you're just thinking purely in terms of that success was you and nothing else at play. Managing that part of your psychology and just sort of, like I said, the key to trading successfully is to not trade. It's to actually know when I've had enough, step away in a way. And so that's sort of my 2 cents on the topic from, what I've always seen not work for people.
I was listening to you give your answer, and I can hear a bit of that. I heard you mention earlier that risk management was kind of your forte back in the day, and I can kind of hear it as you approach all the questions, and it's lovely to hear. So I kind of want to ask you, how do you define risk management, and how can traders correctly manage their risk, whether that's in trading their personal capital or, how they trade the capital of a prop firm?
I think, look, the main thing when it comes to trading risk, again, from what I've seen out there, and I think I was saying it before, it is really just about trading less. These days, you can with a prop firm because you have unlimited time on all of them. They're
Mhm.
very fun. It's challenges and on most prop firms. But it's the idea of not rushing it at the end of the day. I mean, I think it's tempting with a prop firm. You know, the idea if you pass this, you get access to this capital, you make a few percent a month, you're making a solid income there, and people always want to get to that stage. But I would always say that long-term success, ironically, is about trading less. And I think it comes down to having a sound strategy, and that could take various different shapes and forms. So I won't comment on that. But I would say that not over leveraging your account, not over trading, they're sort of the key things that I would always say to someone from my perspective. And I know that's quite broad advice, but I just think that the simplest advice is often the best. So that's sort of my perspective on that side of things.
Got you. And I appreciate you sharing that. Sometimes we hear this a lot when we're asking other prop firm owners or CEOs or founders what they think about certain things. A lot of times they mention how what they're saying isn't the typical flashy stuff on Instagram that's catchy, but it is the truth and it's fundamentally sound and it is what you need to really get to where you need to go to. So I appreciate the candid advice. Another question I want to ask you is, once a trader becomes funded, what advice would you give them in terms of how they can maintain their consistency and profitability long term with your firm?
So the main key to this, and I've always said this to people, and I was talking to a trader about this the other day actually, is you have to be dynamic. Like, I hate that we live in an age where it's always, this is the holy grail strategy. This always works. This is eternal. And I don't like that because markets are dynamic and there is no one
Mhm.
size fits all strategy that will work in any market condition and that. And anyone trying to sell you that is just lying. Like, that is something I wholeheartedly believe. There actually might be a silver bullet that could work amazingly. This strategy is always great, but the market changes and it no longer works. I know you're familiar with the turtle trading story from the 1980s. Hedge fund manager teaches this real
Mhm.
simple strategy, bunch of common everyday people. It's successful and you can make everyday people into, very wealthy people. But then the strategy stops working. And that's the thing too that you have to remember is, and I'm a big believer in this when it comes to strategies, that, it's kind of like if you're reading about it, it's too late kind of thing. And, you see all
Mhm.
these dime a dozen, courses out there selling these strategies. But ultimately, I think the thing that traders need to remember, and it's kind of ironic, is you are trading a market at the end of the day. Like, I always joke to people, like, pretend it's a market. Like, I think we get so caught up in, this candle is above this candle, buy, sell. It's not just numbers on a screen. It's not just wicks, candles going up and down. Deep down there with liquidity and with other things, there are buyers and sellers ultimately influencing and
Mhm.
dictating the price. And the thing that's great about the turtle trading strategy, and it's a really valuable lesson for traders, is that the more people do something, the less liquidity there is on the other side to take that trade and to actually give you those profits. That's why copy trading, following signals, doesn't actually work, because if everyone was to follow the same signal, everyone will be slowly filled further and further down an order book as there's less liquidity and there's essentially a diminishing return on it. And I say this to traders too, because people come into me and they say, like, oh, I've got this great strategy. Fund me with $2 million in sim capital. And I'll look at the strategy and it's like, oh yeah, this isn't going to scale. It won't actually scale to that. Because
Mhm.
people think that, oh, my strategy works on a $5,000 account. Surely it'll work on $1, $2, $3 million. No, there's diminishing return on that because there's only so much liquidity on the other side of the book, whether it's with a broker, liquidity provider, or even, out in the open market, that can take that. In being dynamic, traders need to be dynamic with what the current market conditions are, but also
Mhm.
what liquidity is available as well. I think ultimately, like, as you scale a strategy, it will stop working. And, I met a lot of people that sort of I guess, fund managers of the word, or they're probably more micro funds, and they've got a lot of strategies, and they say, they look at, for investors and things, they say, I can only scale a strategy to $3-4 million. It'll start diminishing after that, and it
Mhm.
doesn't work unless I find more liquidity providers or things like that. And that's how they think. I think traders often look at what they're doing in a bit of a black box vacuum and don't realize there are other forces at play.
Factors,
And to an
yeah.
extent, I don't blame them with how the space is right now. It's kind of the problem, because I thought it was a really good thing when everyone opened up and said, look, on a prop firm, you're trading simulated capital, you're trading virtual capital. That's how the system works. And I always thought that was a really good thing, to be transparent with traders and tell the truth when that happened. But now, like a lot of things in this space, what starts out as a good thing ends up being a bad thing, because now the opposite approach, a lot of people treat this like it's fantasy sports. They say, well, it's all simulated anyway, so it's not real. But that being said, and we take a different approach. That's why we do the same trading conditions as blueberry markets. It's why we have $7 commissions. We charge swaps because we make the simulated conditions as close to real as
Close to the
possible.
yeah.
Ultimately, if you're going to pick successful strategies, if you want to use that data from your traders in the live market, their trading has to match live market conditions as much as possible. The difference between, really when you're trading at large scale, the difference in profitable and unprofitable strategies can be like $50 per million, which could work out to be like, $10 per FX lot. It doesn't sound like a lot, but when you aggregate strategies in the live market out over months and years, that's what it is. So these firms out there that say, well, it's simulated, so we don't charge swaps, or it's zero commission, or here's 100 to 1 leverage on gold or something like that. To me, they're not treating it as the real endeavor in a way, because that's sort of a giveaway to me. You're not actually able to use the data you have in the live market, as it's corrupted data, because they're all trading on
Mhm.
fantasy sports conditions. And I think that traders just need to remain dynamic, because what will happen is you'll see traders, they'll get 1 or 2 payouts, then they lose the account. 30% of people that get funded reach the first payout, then another 30% of that reach the second one. And it's such a diminishing rate, really, because they don't have a strategy built for the long term, or not a strategy or a mindset. It's not even about one strategy. It's about having a dynamic mindset that could allow you to change strategy, change tack as volatility changes and as the markets change. The amount of people that would blow up accounts or things, and, I'd be talking to it and say, oh, it was, the election period, the markets, they just changed on me. So it was a
Mhm.
stroke of bad luck. And again, that's a terrible psychology thing right there, because it's like, oh, when you fail, it's bad luck. But when you succeed, it's all your skill. If your failures are purely because of luck, people ask me like, oh, can I get my account back, this or that? It's just, there's a stroke of bad luck and things like that. My strategy is sound. And I'm like, the fact that you said the word luck is the reason for your failure. You could be an amazing trader. It says to me that your psychology is not there. You're looking at it the completely wrong way. But also, you should have the foresight to know that, okay, election's coming up. And it was an interesting election period, to be honest, in terms of volatility and how the market reacted. I mean, in my opinion, kind of lackluster because it was priced in a bit. But that being said, if you have any doubts, just again, like I said before, it's about not trading. If you think, look, as much as everyone wants to pay out during that month, if you think that your strategy may not work, just stay out of the markets. Like, it's actually really the easiest thing you can do is just don't
Mhm.
trade, don't do anything.
I want you to kind of just a little bit more elaborate on like what you think the space will look like in the future for this whole trading and prop firm space.
So it's really hard to predict. I mean, I thought at the start of the year we'd see a consolidation in the space. And even though a lot of firms have failed and gone down, we still just keep seeing new ones popping up. And I think that that's in response to a lot of cheaper technology and pathways coming into play. Because I was thinking earlier this year that, okay, a lot of the major platforms have been lost, a lot of large firms have gone down. There's a lot more distrust out there for props. We'll see a consolidation. But actually, we're sort of seeing the opposite. We're seeing more brokers jump in. I think brokers are seeing this as their time to jump in. And we're seeing a lot of smaller prop firms join as well. So in a way, I always thought there'd be more consolidation, but I'm seeing a bit more expansion now, which isn't a bad thing. It means the product's popular and there's a lot more reach for it. But I still think long term there will be further consolidation in a few ways. I think that the growth of the rate of new firms entering and sort of the actual amount of sales in it, or the amount of potential revenue, does not scale at the same rate. So if we see
Mhm.
more firms are entering to take sort of a slower growing rate of revenue in the whole industry, like that's not
Gotcha.
sustainable for all firms. And again, like we're continuing, like I said earlier, like I thought we'd see the end of sort of the fantasy sport race to the bottom side of things. But I think with a lot of smaller firms entering, because the costs are lower than ever to enter on these other platforms and these, cheaper and cheaper CRMs and that, we're seeing even more race to the bottom in conditions as well. So look, I'm confident that whilst there's continued expansion and people entering, like we're going to just continue to see consolidation, firms going down and things like that, which, look, isn't good, but it's just that part of the business cycle. Obviously, like you're saying, look, if regulation comes in, I think that would be a very big shortcut to consolidation, because a lot of, the entry level aspect of it being cheap kind of, whilst there are, cheaper, lower cost avenues to regulation, it is that slight greater barrier that's going to hold up someone who just wants to play around and start a prop firm. It cuts sort of those people out of the picture. It's really hard to predict. I mean, regulation, very likely. Consolidation, yes, but after sort of a briefer period of expansion. And we're definitely going to see more brokers enter the space as well, because especially if it gets regulated, because they sort of would have a very, quick fire way to come in, assuming that regulation matches existing CFD brokerage regulation in some way, or comes under the same license, maybe with different permissions. I've heard some different things about the form it might take. But that being said, and look, as much as I've been saying this whole time, I'm an advocate of broker-backed prop firms, I think brokers also don't know what they're getting into as well. I think brokers, ourselves and some of the other broker-backed firms, had the benefit of having experience in the prop space and moving into it. I think a lot of other brokers see it as a bit of a cash cow, or something they could just attach a prop firm to their brokerage business and it's happy days. And whilst brokers have a lot of experience in liquidity, risk management, and things like that, it's kind of funny. There are nuanced differences in managing the risk of a prop firm. And it's almost like those tiny little differences can be really hard for brokers to sort of get their heads around. And we do see this. We see brokers entering the space, and it's kind of like a bit of a polarizing thing. We see like tiny people enter the space with the e-commerce model fail because they don't know what they're doing. We see brokers entering the space just diving in sort of with the opposite mindset of thinking they know everything because they've been in the industry for a while. And those little nuanced differences they overlook, and they're not doing too well, or we're going to see some brokers have issues as well. And so that comes back to sort of why the strong point of Blueberry Funded is we try to be the best of both worlds. We have a lot of staff with experience in the prop space, including myself. We have the broker-backed entity and infrastructure, and we have a lot of experience in the brokerage space. So that's kind of the important thing too, is that we're going to see a lot of brokers come into the space. And as much as I'm an advocate for broker-backed firms, I would always recommend traders to do some deeper digging as well into those, because, I think the problem, much like with trading, I think, and I don't blame traders because there's been so much chaos in this space. They're always looking for the silver bullet firm who's, never going to deny pout or never go down or anything like that. And as more broker-backed firms enter, which I think is good for the industry because they are regulated in that, I would still exercise caution and do your research and look a bit deeper under the hood to see what's there.
Awesome. Sounds, like I said, just very exciting stuff and a lot of information for us to really consider, and helps us understand, especially from your perspective, where things are headed. So I really love that. Marcus, anything else you want to share with our audience about Blueberry Funded, whether it's in terms of the prop firm or trading in general? Any last words of advice that you want to leave us here with?
I think the main thing is I've touched on this here, just closing points would be, look, we have a commitment to sustainability. I think traders, for their own sake, for their own simulated capital, their own profits, and for the industry in general, also need to have a sustainability mindset. It's about changing the narrative right now. I think this industry and the community has been through so many ups and downs. And I think it's really easy as a trader, as someone who's purchasing a retail product, you want the best value for money. But I always ask people to, look a bit deeper into these firms, look into the product, think about sustainability, because, there might be a cheaper challenge. It's going to give you a lot of leverage. It's going to give you a lot of drawdown, allow you to essentially gamble in any which way you want. I would also say, for the good of, your own trading, your own capital, and for the industry, I think we all need to come together to change the narrative. And it's not just Blueberry Funded as much as part of our core commitment. There are a lot of other great firms out there that I think their challenges and the way they operate do reflect sustainability. And I think that's my message for traders out there, is if we want this industry to grow and be better for firm operators and for traders, I think the direction we all need to head in. And look, it's good to see Prop Firm Match as well, really takes a high standard when it comes to this industry and listing and sort of how you operate. I'm excited for the future and bringing the industry to a higher standard, and invite traders to do the same.
Thank you so much, Marcus. That's been such, again, a great and amazing information that we've been able to really take in from your part today. Marcus, where can the people find you in case they want to contact you or hit you up on the socials?
I'm obviously not massive on social media personally. I'm not one of the Twitter CEOs or anything like that. I stay out of the limelight, I guess, in sort of that front-facing way. But look, if people ever want to reach out to me on LinkedIn, I'm more than welcoming of that. They can obviously message partners@blueberryfunded.com, come through on partnership or collaborative ideas or anything like that. We're always welcome for that. It's sort of one of our main points of flexibility and one of the strongest parts of our business. People can obviously reach out. It's Marcus Featherston on LinkedIn. Just email in. I'm quite responsive, always have time to chat with people, always welcome people coming in for a conversation.
As promised, here's exactly what you've got to do to enter the giveaway. First, you've got to like the video, then subscribe to the channel, and comment in the comment section below what the main trading lesson that you learned was. Winner of this giveaway will be announced in the next video, so stay tuned. Marcus, once again, thank you so much for your time. We appreciate you being here. Thank you.
No, it's been a pleasure, Emmanuel. Thanks for having me.
You're very welcome. And to everybody else who's watching, once again, thank you so much for watching this episode. We appreciate your love and support. And as always, we'll catch you in the next one. Take care.